Hey everybody, this is another edition of That's Our Two Satoshis Live. I'm Jeff Dorman, Chief of Arca, live from our new office in Los Angeles. So if you're in the LA area, contact us and come by and see the new digs. A lot of carnage in the capital markets these days, from equities to digital assets, and even as far as into the bond market. So a lot going on. Usually I'm joined by some of my esteemed colleagues here at Arca, but we're also busy that I'm going to do this one solo today, so that you're getting stuck with just me. So as always, we're going to talk about some things going on in the market. If you go to our blog at ar.ca, you'll see that we wrote an article today talking about how DeFi is beautiful amidst all the carnage and chaos. But before we get into DeFi, let's talk about what else is going on in the macro world. So, we know macro has been dominating the markets for the last, call it 8 to 10 weeks. Last week was no different. We had fears of inflation, induced profit margin declines. Fed Chairman Powell came out with a pretty hawkish testimony. You can have increased geopolitical conflicts. But the equity market actually was able to bounce back. A big Friday rally that staved off what could have been even further collapse in equities for the month of January here. But what I think is interesting is because the equity market is also such a bad start, with the Nasdaq down almost 15%, the S&P down 7% to start the month. Naturally, pretty much every investor out there, including ourselves, is trying to draw parallels to other environments. For example, the VIX rose 50% in a single week earlier this month. Just about every single time that has ever happened, the 1-year forward returns for the equity markets have been positive. Generally what that means is every time we get to super heightened fear in the market, where you see a really steep, fast decline in equities and a steep volatility spike, it generally is a buying opportunity, is what that's saying, right? Is that you want to get long when the market is max fearful. Similarly, if you look at a chart of amongst professional investors to tech stocks, we're now at the lowest allocation to tech stocks since basically January of 2009, which, if you've been studying the Nasdaq, January 2009 was basically 1 month before the all-time lows, before a 1,400% rally over the next 12 years of tech stocks. So there's a lot of things that people are pointing out to right now, saying, how is this going to be different? What is this environment looking like? In fact, one of my colleagues, shout out to Andrew Stein at Arca, was talking about some parallels with the Super Bowl, even saying that, if you go back to 2000, right before the dot-com crash, 12 of 61 ads for the Super Bowl were purchased by dot-com companies. That's pretty similar to today's environment, where crypto.com and FTX are spending ungodly amounts of money putting ads everywhere. In 2000, Fed Chairman Greenspan started to raise rates, and that was largely believed to be what caused the tech bursting of the bubble. Same as what we're seeing today with the beginning of raising rates. Actually, really interesting parallel is MicroStrategy, not just a Bitcoin company, been around for a couple of decades, but back in 2000, MicroStrategy announced due to too aggressive accounting practices, very similar to what just happened to MicroStrategy a few weeks ago, where they had to do a revenue restatement due to aggressive accounting practices with how they were accounting for their Bitcoin. You go on, and there's all kinds of different scenarios that look similar. But the key difference, in our opinion, is that go back to 2000, for example. The Fed started raising rates in early 1999. The Nasdaq rallied over 100% over the next 1.5 years, from the start of raising rates to where they ultimately started lowering rates again. And in fact, equity market only started to go down, and we have a nice chart of this in our write-up. But the equity market only started to go down in mid-2000, and that was after the yield curve inverted, and it was actually once the Fed started lowering rates again. So we've talked about this a couple times in the past, but there's almost no precedent for what we're seeing right now, where the equity market and the digital asset market is essentially pricing in 3 years worth of Fed tight in about 3 weeks. This is just not what you normally see in markets. In fact, most of the time, markets rally throughout a Fed tightening cycle and only start to sell off at the very end of it when the Fed inevitably goes too far and too fast. So with that in mind, one of the stats I read from our friends at Galaxy Digital last week was that almost 90% of the top 200 digital assets are down more than 50% from their highs, with the average down 73%. And also in the equity market, very similar. 40% of Nasdaq listed stocks are down more than 50% from their 52-week highs. that's a lot. That's a lot of carnage, just because the Fed may or may not raise rates, 5 or so times over the next 2 years. So consider me skeptical of the sell-off. I don't think we completely fly off the shelves and rally right back, but to me, it feels more like the aftermath of March 2020, where lots of people were loading up to short the market. We were going to crash further. Other people were loading up to think we were going to just rally, right away and go, get the gains all the way back. And the reality is, we're somewhere in between. We just kind of had a slow grind higher through April and through May until eventually FOMO kicked in and leverage and greed kicked back in, and all of a sudden you start to fly again. I think that's probably what we're in store for here, is a slow grind higher in both the equity market and the digital asset market. And eventually, we'll get back to crazy levels sometime in the second or third quarter. All right, away from macro though, let's talk about DeFi. Big story last week. A lot to do with Frog Nation. For those who know, Arca obviously has some involvement with Frog Nation through Sushi as well. But basically, the CFO of Wonderland was revealed to be somebody with a checkered past. Let's say, some criminal activity, as well as being a part of the Quadriga scandal. This kicked off an amazing series of events, even though in theory it's isolated to just one individual who runs one DAO, Wonderland. It kicked off a huge chain reaction. Right, first was MIM, the asset-backed stablecoin of the Abracadabra protocol. A lot of people pulled out of the MIM UST pool, which then led to a lot of selling of UST, which led to Luna going down, which led to panic about the UST peg. You had all the different tokens in the Abracadabra Danny Sesta system, like Spell, Time, and Ice, fell anywhere from 30 to 70%. And even Sushi, even though Danny was the only one involved there and hadn't even started yet, even Sushi took some heat, based on this association. So the entire media is focused on bad guys in DeFi, right, and protection of assets. But to me, that's the wrong story. To me, the story is, it is amazing in the face of just constant internal turmoil and developers leaving and moving around projects. Hiccup, right? There was no issues with DEXs, right? DEX volumes were doing great. There was no issues with borrowing and lending. Everything from Maker to Aave to Compound performed exactly that like you'd want to. Insurance did fine. Things like Nexus Mutual. So to me, the story is not about a bad guy in crypto like the media likes to talk about. To me, the story is, this is just yet another stress test of DeFi, and it wildly succeeded. Right, no different than May 2021, no different than March 2020. When you see, I'll give some numbers here. Over the last week alone, because of the volatility, Curve had the highest volumes ever with 2.2 billion in volumes. Right, it was their largest month ever. Here's some other numbers. Sushi was up 41% in terms of volumes. Uniswap up 78%. Balancer 138%. Curve 150% over just the week. These are huge numbers, right? If you go back to May of 2021, kind of the peak of DeFi trading, we're right back there again. When you include all the new decentralized derivatives protocols like DYDX, combined with everything that's happening in Curve, Sushi, Uniswap, Balancer land, we're right back to the highs. So DeFi is thriving. Even while the media focuses just on these one-off issues. And I think probably even more important with all of this is, with all the talk about regulation and how we need a cop on the beat, as Gensler says, the reality is, like, how did this come to light? Once again, it was a DeFi on-chain detective who figured out through looking at block explorers who Sifu was, who happened to be Michael Patron, and all these different transactions that he was doing prior to even being a part of Wonderland, and also after Wonderland. Like, that's pretty powerful, right? If you look at the traditional world, there's fraud and scams in the traditional world too. Everything from WorldCom to Enron to the more recent one. Forgive me, I'm forgetting the name of it. Theranos, and in like 15 years. Right? These things happen all the time. The difference is, in the traditional world, when these happen, it's usually 2 to 5 year sagas that go unnoticed for a long time, and eventually only collapse upon themselves when there's hundreds of billions of dollars at risk. In DeFi, these things happen in a week, right? Some wonderful unpaid on-chain detective will solve this problem and find it. They'll alert it to the world, and the problem is averted before it becomes too big and out of hand. I think that's the most beautiful part about DeFi is just how self-policing it really is, and how the community can be the checks and balances to make sure that we continue to see real growth and real progress and real traction while avoiding, some of the bigger issues. So, again, I think, my takeaway here is DeFi is the solution and not the problem. And even when people like Senator Warren and, even Mark Cuban complaining about being rugged, like, they're focused on the wrong thing. There's always going to be bad actors. There's always going to be a scam here and there. But what DeFi has built and how it has performed through these, large test case is something that we should all be proud of. And I think it's only going to lead to more users and more growth over time. So we'll see. Excited about the growth of DeFi, even if the price of the tokens isn't representing that right now. But happy to be a part of this, and excited for all the different projects and protocols and companies that succeeded last week. So to be continued next week. As always, thanks for joining us. You can find our blog and read the whole thing and see all the charts on our website at ar.ca.